This video will show you how to fill out your personal property sign statement for an existing business. Please note that the deadline is May 15th, 2018. If you do not file by May 15th, 2018, you will incur fees and penalties. If your business is closed, changed ownership, or has changed names, please contact our office at 801-451-3249 and let someone know that the business has changed names. Line 1 is the 2017 market value minus supplies based on previously reported assets. Please do not change or alter this amount. This is a sample of a Schedule A. This Schedule A lists all of the assets that have previously been reported. You'll note that the same value of $1536 was the same value that was listed on line 1 of the signed statement. Line 2 is the current monthly supply amount. This number is pre-printed over on line 2. If this number has changed, please cross through the pre-printed amount and write the correct amount. Monthly supplies can be determined by taking the total cost of supplies on hand for the year and dividing by 12. Supplies on hand include all office supplies, replacement parts, maintenance supplies, lubricating oils, fuel, and consumable items not held for sale in the ordinary course of business. Inventory items are not included. Line 3. If you acquired new assets or disposed of, which means sold, gave away, or threw away, old assets in 2017, you must complete the Schedule B listing the acquisitions and deletions and placing that total on line 3. I will show you how to do that on the next slide. You cannot dispose of assets you have not previously reported. All disposed assets must match exactly to the assets on Schedule A. This includes year acquired, cost, and percent good. If you have not acquired any new assets or disposed of old assets during 2017, this line will be left blank. Schedule B is broken down into two parts. The top part is any assets that you acquired during 2017, and the bottom part will show any assets that you disposed of in 2017. Let's say, for example, that in 2017 you bought a new bookcase for your business at a cost of $350. On the next slide, we will see how to look up the property class and the percent good to come up with a taxable value. Included in your packet is a personal property classification guide. This will give you examples of different items that fit into each property class. As you can see, in Class 5, a furniture is included in Class 5. A bookcase is considered furniture, so this is going to be a Class 5 property. You will then add a 5 to property class on our Schedule B. Next, you will look at the provided personal property percent good valuation schedule. You will find property class 5, and you will find the year that it was acquired. You can see that the percent good for something in class 5 acquired in the year 2017 has a percent good of 90%. You will write that percent good over on Schedule B. So this was 90% or 0.9 good. You will then multiply the purchase price by the percent good to get the total taxable value. If this does not equal a whole number, please round to the nearest whole number. When you are finished adding all new assets that were acquired in 2017, you will add up all of these values and put the total right here. Next, we will move on to anything that was disposed of in 2017. Let's say in 2017 you decided that you didn't need a desk phone anymore and you wanted to dispose of this asset. You'll notice that a desk phone is listed as one of our assets on Schedule A, so we are allowed to dispose of this asset. Please make note of the year acquired and the purchase price. You will copy the asset you would like to dispose of to the bottom of Schedule B. You will copy it exactly as it was printed on Schedule A. including the property class, the item description, the year acquired, the cost or purchase price, and the percent good. It also lists the taxable value, so you don't need to do the math. Once you've listed all of the assets that you disposed of in 2017, you will add up all of the taxable values and place the total right here. You will then take your acquired assets minus your disposed of assets to give you a total value of assets that were acquired or disposed of in 2017. This value will be transferred to the signed statement, line 3. You will transfer the value that you got when you added up all of your additions and disposals and add it to line 3 of the signed statement. On line 4, you will add lines 1, 2, and 3 together to give you a total taxable value that goes on line 4. If this value is $10,500 or less, stop. Do not calculate the taxes, go to the bottom of the page and sign for the exemption. You are exempt from paying taxes and you do not owe any money. However, you must sign this statement and return it to our office by May 15th in order to qualify for this exemption. If it is greater than $10,500, continue on to line 6. Again, if your line 4 taxable value is $10,500 or less, you will not do this step. If this line 4 is greater than $10,500, you will move on. The next step is to multiply your line 4 total taxable value by your tax rate. If you have moved in 2017, please call our office to get an updated tax rate. If the value is more than $10,500, you will multiply line 4 by line 5 to get the total taxes that are due. If you have a past due balance or a credit, it will be listed here on line 7. In this example, the total assets were less than $10,500, so they would typically not owe any taxes. However, there is a balance on this account from unpaid taxes from last year. So the amount that needs to be paid on this account would be $27.65. Everyone, including people who are exempt from paying taxes, need to sign this middle box. This box states that you are certifying that everything that you have listed in this statement is true and accurate. Please also remember that this form needs to be returned to our office by May 15th, 2018. If it is filed after May 15th, 2018, you will be imposed a penalty for failing to report on time of $25 or 10% of the tax, whichever is greater. So please try to get your statements signed and returned as early as possible. If your asset listing above was $10,500 or less, you qualify for the exemption and you do not owe any taxes. However, you must sign this form and return it back to our office by May 15th in order to qualify for that exemption. If you want to take this exemption, meaning you don't owe any taxes, you will sign the bottom of this form in this highlighted area where you're applying for the exemption. You will sign it and date it, and you're certifying that your assets are less than $10,500. If you qualify for this exemption, meaning you don't owe any taxes, please do not send any money. The only exception to that is if you have a past due amount, please send your past due amount. Please return the signed statement and Schedule B to our office no later than May 15th, 2018. If you send your filing statement after May 15th, 2018, you will not qualify for the exemption and you will be required to pay the tax, penalty, and interest due. You can always call our office at 801-451-3249 if you need help filling out our forms. As an option this year, we have the ability to fill these forms out online. You can go to our website at daviscountyutah.gov/assessor, and you will be directed to an online filing system that will be easier and quicker for you to fill out these forms with. Thank you very much.